Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading. You are tuned in to our most recent episode of the podcast that we have been doing now for getting close to a year. This entitled The Secret War on Cash. I have with me today my frequent co-host, Chris Agelastos. Good morning to you, Chris. How are you?
I'm doing very well, thank you.
Well, that's great to hear. We are getting close to the halfway point through the year here, and it definitely has been a year. Nothing really too transitional has happened in terms of all the things that have been talked about throughout the financial markets and the media with markets, a market pullback.
Mhm.
All the woes of commercial real estate. Nothing has really happened there. Many suggest part of the reason for that is just going into an election year, things tend to get a little bit calm so that the election isn't too overly distorted by the reality of what we're living in. But that aside, let's talk a little bit today about the reality that we're living in.
Mhm.
And what I mean, let's look at the first article here, and we really haven't uh, specifically delved into this on any of our podcasts thus far. We've kind of talked about issues that are kind of surrounding it, but not this specifically. And as you see in the title there, U.S. money supply is doing something so scarce that it hasn't happened since the Great Depression. And a big move in stocks may be forthcoming. Now, when I got into this article, it's very interesting because, and you've kind of touched on this in other podcasts we've done, Chris,
Mhm.
how at some point and at some level, math does matter. The math and the reality of what is taking place. That is something that we're going to have to contend with. Pay the piper at some
Yeah.
point. And so, as you look at the money supply and what it's doing, tell us what they're talking about here in this article. What is this money supply activity, and something so rare that we haven't even seen anything like it since the Depression?
Right. Well, the first thing, the reason they're looking at this, right, is because everybody has been kind of waiting for a market drop. We haven't had a really big market drop in a while, yet all the conditions are there, right? The math kind of adds up to say, we should be expecting a big drop. So, in this metric, what they're looking at is the U.S. money supply, and there's M1 and M2, and M1 is basically cash, money in people's checking accounts that's easily accessible, and money, M2, excuse me, is money that's a little harder to get to. It's like your CDs in the bank, money market accounts, longer term saving accounts. And the reason that number is important is that for the last 90 years now, M2 has consistently been rising. So it means people are building more wealth, setting aside savings, which is a good thing. It means that things are running okay. Maybe not perfect, but we're heading in the right direction. Well, now for the first time in 90 years, M2 has dropped $1 trillion over the last year or so. First time since the Depression. And only four times in the last 150 years has this happened. And each time it's happened, we've had a depression, and not only that, but double-digit unemployment. So it's it does it mean that just because it's happened every time, the last four or five times, that it's going to happen again? Not necessarily, right? But there's a strong indicator that we are going to see some pain, which everybody has been expecting. Now, I will say, they go on in this article to point out that as long as you have time on your side and you have 20 years or longer to invest in the market, you don't necessarily have to worry about these big drops, right? But a lot of our clients, a lot of the people out there that are concerned and have savings, are probably less than 20 years away from retirement. So those are the people that really need to be concerned. If you're 20 years old and opening up your Roth IRA and fully funding that, I don't think you have to stress so much about the Dow and the S&P dropping over the next couple of years. But if you're closer to retirement and you have that money, and you need to rely on it, you really want to consider protecting yourself, making sure that you're properly diversified. Again, not having all your eggs in one basket. I know it's been a great market run for the last 10 years or so. But that we know that doesn't always go on forever, right? People just need to start paying attention to these things, and this is a pretty big indicator. I'm shocked that we haven't heard more about it on mainstream media, other than the fact that they probably don't want us to know this stuff, right?
Well, yes, and what's interesting as you bring up, they do mention the fact that that there's that 20-year
Hmm.
cushion, we'll call it,
Hmm.
and I do find that interesting because as you look at that, and mathematically and statistically, oftentimes you do find that to be the case in markets. That
Hmm.
they ebb and flow. There's the ups and downs, etc.
Sure.
However, when you factor into the equation things that we've talked about another or discussed in other podcasts, like BRICS,
Yeah.
and alternative currencies that like CBDCs, et cetera, like that may be coming out. I'm not so sure, yes, if it's just the normal ebb and flow of what we've been accustomed to seeing in our marketplace and our economy, that would be certainly true. But when you start factoring in the things like our currency in and of itself that is
Hmm.
driving our whole system might be changing, it makes that recovery not quite as systematic, we'll call it, as what we might expect or what historically we have seen.
Sure.
Now,
Yeah.
as we talk about money in this next article here, it's one of the things that has been, anytime you hear reports about, what's going on with our money, our markets, and some of the problems that are
Hmm.
brewing, it's literally followed up with something that's happening in gold.
Hmm.
And this article here, how gold prices are dramatically outperforming. Why this is happening and how this continues to happen, excuse me, is for these reasons that surrounding all the things that are happening in our economy. Certainly
Hmm.
M1, M2. Certainly what we see happening with inflation. Certainly some of the uncertainties that we have with our real estate market, what we might see happening in the stock market, and on top of all that, and these are influences of the market. When you take into account as well the actual assertive factors of the market. What I mean by that, central banks who are literally physically buying gold in the tonnage, as
Hmm.
BRICS has been doing. And now you're finding financial institutions and investors alike doing the same thing. This has just been at every turn a positive for gold. Is this something that you think or foresee happening as we move on into the future here?
I think so. The one of the biggest values I think in gold is just its safety. Its security, and more people are looking for something that they can count on, and that's obviously one of the things that's been pushing gold to reach these new highs. Obviously, you mentioned the central bank buying. There's a growing interest in China, which is obviously a huge economy in the world. And investors are also looking outside of the U.S. more now. So, for a number of years there, it was okay. What's happening in the U.S.? This is going to be my primary influence on how I invest my dollars. And now we're much more of a global economy, and investors are looking outside of the box a little bit, if you will. So that obviously, with all the industrial uses of gold and silver and other industrial metals, it's all pushing it to rise. But I think that just simply for the security factor, the one unique thing about gold is if I put my money in the bank, I'm relying on that bank to stay solvent, right? I'm sort of indirectly kind of investing in that bank or their reputation. And what's nice about gold is you don't have to do that when you own gold. Nobody else controls that gold. You don't have to worry about that gold making bad decisions and destroying the market or going out of business. It's something that you can hold that gives you additional security and less risk, and it just helps smooth out the bumps in the rest of your portfolio. Because obviously,
Sure.
there's only so much you can do. People are still going to see ups and downs in the markets, but anything you can do smooth that ride and help you sleep a little bit better at night, I think that's the key, and that's obviously what is helping to push gold prices here.
Sure. Yeah, and I agree with you. And I think that first and foremost, just the diversification aspect of it, to have your money put into something that isn't a freestanding asset, not encumbered by any debt.
Hmm.
That's goal number one. Goal number two, or benefit number one, we'll call it. Benefit number two is the fact that it has been a very solid performing asset
Yeah.
class. And for those of you tuning in, if you have questions about gold or you want to learn a little more about that, feel free and contact us at our office. We've got plenty of information and materials we can send you at no charge. You can do that at 1-800-289-2646, or you can also visit us online at www.swissamerica.com. Chris, thank you so very much. And
Yeah.
let's just continue to watch gold and see
Hmm.
what's happening with our currency, our dollar, our markets over the course of the next several months, especially as we have been talking about here earlier, getting into this election season. There's a lot of changes that potentially could be happening. It's just
Yeah.
most would say not a matter of, or many would say not a matter of if they're going to happen. It's just when. So
When, yeah.
we'll be tuned in for when, if and when that does happen. So thanks for tuning in. If you're not subscribed to this, please do so and follow us on social media. Until next time, have a great rest of your day, and we'll see you soon.
Take care.